Hey everyone, I cannot do this anymore. I just can't do it. That is the topic of today's dividend investing video. Let's get started. Seriously, this video has been delayed for a while. I was trying to publish videos every 5 days. Now it's been over 7 days. I have been so busy. I haven't even been checking my stock quotes. Literally over the last week, the whole week went by. I don't even think I was looking at stock quotes, stock news, anything like that during the entire course of the week. Here's what's happening. I'm a commercial real estate developer by trade, and a project that I have been working on, a property that I have been personally developing for the last 4 years, finally we are at the finish line. And so we're going to open for business soon. And this is a self-storage facility, and it is involving so much work just to get all of the marketing, get all of the little details all perfect in time for opening. And so I've been working around the clock. It has been a very busy week, and I have been thinking about stocks, thinking about YouTube, but at the same time I kind of realized I just can't do this anymore. At this time in my life, given what's going on with my career, I can't do it. And so that is okay, however, because isn't that the point of dividend stock investing? The point of dividend stock investing literally is for times like this. How many times in your life have you run into this type of situation where you're so busy with something, you're so tied up in something, something has come up in your life, and it is so important that you focus on that, and it's somewhat all-consuming, if you will. How many times have you faced something like that? From time to time, I definitely face something like that, and right now it just happens to be career related, and I am so thankful that I invest in dividend stocks, because the types of dividend stocks I own, two of them I'll talk about later in the video today, KIMBERLY-CLARK and PEPSICO. These are stocks literally that I can buy. I don't even have to look at it for 10 years, 20 years, 30 years. Check back in 30 years. I don't care what's happening with the news. I don't have to follow the news. And so many investors these days, they're just tied up in the news. They're wondering, what did the company earn last quarter? What's their strategy? What are they going to do about X, Y, Z? But for me, one of the big realizations I had this year, largely driven by the global pandemic, is that I am hyper-focused on my ride or die dividend stocks, my favorite dividend stocks of all time. And it just so happens that KIMBERLY-CLARK and PEPSICO are on the list. And so the reason I'm so focused on those stocks are, one, I believe that they are pandemic proof. These are the types of stocks that not only are companies, that not only survive and raise dividends during times like this, but they actually thrive. They meet the needs of our society during hard times, and they thrive. And so that's been my strategy. And I own 46 dividend stocks, but I am really focused on my favorite dividend stocks. I'll link to my favorites in the description below. I'll also link to all 46 stocks in the description below. But basically, that's what's going on with my year right now. But also my strategy, I am even more focused and more excited about it because I see what's happening in my career. It is so consuming right now, and in a good way, quite frankly. I am learning new things every day. I am growing very quickly. Hey, I am excited to see the fruits of my labor over the last 4 years. It has been a long haul to build this beautiful facility. But it is all consuming, and because it's all consuming, it makes me appreciate my ride or die stocks even more, because these are literally the stocks. I don't care what happened in the news. It just doesn't matter. I can buy them, set it, forget it, move on with my life. And so I wanted to point that out just because I asked on my Facebook group, I'll link in the description below, hey, what would you all like to see in the next few videos? And one of the popular requests is, Ian, what's going on with your life right now? And so I wanted just to share that tidbit about my life right now because it ties into it. It ties into dividend stocks, dividend stock investing so much. And so on this topic of I can't do it anymore, look, don't worry. I will never give up dividend investing. Like I said, because I'm kind of in this mind frame, I can't really do it right now. That's okay, because the dividend stocks, they do it for me. While I'm focused on my job, I don't have to worry what they're trading at. I don't have to worry about what price I'm reinvesting at. I don't have to worry about the news. And it seems like so many investors these days are focused on the news. And so obviously with the YouTube channel as well, I'm in this for the long haul. And so I do apologize that this video is a little bit delayed. I hope after my facility opens and things get a little bit back to normal, I'll be on a quicker cadence. But thank you for all of your support, subscriptions, all of my patrons. I love you all. It means the world to me. I am here for the long haul. But on this topic, I want to actually share something, because I think it's really good I'm going through this situation right now, because I like using myself as a personal case study for the dividend community. And one of the things that I see all the time is there's a lot of dividend investing YouTube channels now, Instagram accounts, all kinds of content online. And one of the things that I'm seeing as a trend, and look, to each their own, I'm just speaking to my personal journey here and my personal situation, but kind of ties into a video suggestion that one of my Facebook friends sent. And I'm going to respectfully say that unfortunately I'm not going to go with this suggestion, but the suggestion was, Ian, could you cover the news in your videos? There's a lot of channels out there that cover the news. Bless those people, those YouTubers who actually enjoy the news. I just don't even enjoy it. I mean, I enjoy it obviously as it pertains to my companies, but staying like really fine-tuned to the news on a day-to-day level, it's just not who I am. It's kind of not in my DNA. For me, I'm more of a producer. I like to get out there and hustle and make money. I like to work hard, and then I like to take the money I earn from working hard and invest in passive instruments like dividend stocks. Anyways, one of the pitfalls and traps that I see in the community more so than ever is people are kind of taking this concept of analysis paralysis, following the news, following all these little micro level details to the next level. And they're doing it with dividend stocks. But again, the purpose of dividend stocks is not to get into all of those details on a day-to-day basis. Look, if you followed my channel for a while, you know I'm huge on fundamental analysis. When I'm going to initiate a net new position, I go all in on the fundamentals, and I believe the Excel spreadsheets, all the free content, all of that shows that I am one of the most extensive fundamental analysts out there. But look, once I own it, I don't need to follow PEPSICO or Kimberly-Clark on a day-to-day basis. I follow them honestly mostly because of this channel. If I weren't YouTubing, I probably wouldn't look at Kimberly-Clark earnings reports too closely at all. And that is okay. That's one of the key points of the video today. That is okay. It's okay not to follow dividend stocks every day. It's okay to have these times where you might take a break from it and let the stocks do their thing as they should, which is earn money while you sleep or while you do something different. And so the key is, for me, I've kind of, as an investor, I've been at this a long time, over 20 years. There's been, heck, I've been on YouTube now for a long time. Shout out to all the OG Thug Life investors, if you remember all of my videos from this very corner. Fun fact, it's Friday night, late at night, but it is so hot I'm not doing it in my garage tonight. It was 100 degrees here today in the Bay Area, and so I have to be inside where it is a lot cooler. And so please give me a thumbs up if you enjoy the videos from the corner or you remember them. Put it in the comments below. But I'll tell you, as an investor who's been investing a long time, there are, no matter how passionate you are about it, there's going to be times in your investing career where you just get caught up in something else. Other stuff comes up in life and it kind of takes a back seat. Like right now, maybe you're new to dividends. It's all exciting. You're doing a lot of stuff. But there will come a time, if you're in it as long as I am, and it'll come many times, that it kind of takes a back seat. It kind of, other stuff becomes a priority in life. And it can be stuff outside of career, like for example, when my son was born or my daughter was born, or we were getting married, those types of things, or buying a house, those kinds of things. It can take a front seat, and then you start dividend stocks. It may be a passion, but it just kind of goes to the side. But again, I want to share this because why it is so exciting is I think dividend stocks, in my humble opinion, are one of the only vehicles where that's possible. And so obviously index fund investing, ETF investing, shout out to all of those out there who do that. I give you guys trouble all the time because I do like individual stocks, but I shouldn't. Index funds, ETFs are valid, great strategies as well, and very passive. But I'm trying to contrast this with, say, tech stocks or buy low, sell high, more active stock management. One of the reasons I love this strategy so much, again, is it totally jives with human nature, quite frankly. And human nature is that sometimes it'll be in the forefront, sometimes it'll go in the background like it is for me right now. But don't worry, I'm still buying stocks. And in fact, with that, I wanted to go into a stock that I recently purchased earlier this month in August. And so let's talk about this. Let's talk about Kimberly-Clark. All right. So Kimberly-Clark, I recently purchased more shares, as you can see on the screen right now, for $157.41. And so I purchased those shares very close to the current share price, which is $158.23. And so Kimberly-Clark, the 2020 EPS estimate is a 7.68. 2021 is 7.87. They are doing really well. Earnings are surging. This is one piece of news that I did share in a recent video. And I love their recent earnings reports. They're doing well because consumers are finding comfort in toilet paper right now during this pandemic. And consumer needs are changing because consumers are more at home, so they need to buy more toilet paper for their bathroom schedule. And so the 2020 forward PE is a 20.60 and 20.11 for 2021. I would say, given the interest rate environment, given the quality of this stock, given where if this is literally a stock that you can, well, in my humble opinion, for myself at least, I can buy and hold forever and I don't even really have to look at it. I think it's trading probably at fair value given the market that we're in. And fair value for the market we're in, it's expensive given where markets have been in prior years. It's an expensive market right now, but I generally say it's a fair price, maybe a little overvalued. But for me, given again where I'm at, ride or die stocks that I can set and forget and spin off cash flow that I can use to pay bills, I can buy my time back because I'm working around the clock. Kimberly-Clark, that's the type of company that I love, and I love it at a PE of 20. I'm fine with that. And so moving on, the dividend per quarter is 1.07, per year 4.28. Dividend yield is only 2.7%, not that high. But again, given where interest rates are right now, not so bad. And so the compound annual growth rate of the dividend is a little bit lower at 4% for the last 5 years, but with a payout ratio of 56%, I do think this is a stock that is positioned to increase the dividend, perhaps at a higher clip in future years. And so I want to share some historical stock trade analysis with you all right here on the screen. It's on the same screen at the bottom, and you can see I recently purchased at 157 on August 7th. I'm already up a little. By the way, I share all my trades on Twitter. Please give a thumbs up to this video. Put in the comments below if you're a friend of mine on Twitter, if you follow me on Twitter. If you don't, head on over there. And on Twitter, I just share my trades there. I share them. There's I share all my best content for free. And so that's why I'm so blessed, and I put so much value and thanks to everyone out there who supports the community and those who support me via the merch on Patreon as well, because I'm just putting my best content out there for free. Nothing is behind like a payment gateway or this or that. My private Facebook group is open to all as well, as long as you are able to have a cordial and friendly debate. We just try to keep it professional in there, but again, it's all free. And so thank you to the patrons who generously support the free community here financially. It means the world to me. Anyways, what you see here is on the 18th, or sorry, the May month 5 or May of 2018, I went big on Kimberly-Clark, and in 2018 I had two stocks that I was going really heavy in, Kimberly-Clark and Procter & Gamble, and I picked up some shares at $102.99. This was a huge tranche, and so literally just over 2 years ago, from the tranche I bought just over 2 years ago, I'm up 53.64% capital appreciation. Doesn't even count dividends. And so sometimes, and I always point this out, and I know I've said this a million times, but I have to keep saying it because so many people think it's growth or dividends. So many people think, oh, dividends, you can't have any growth. Or so many people think even value stocks or traditional stocks, they don't grow, they don't appreciate. Kimberly-Clark is a perfect example here. In just over 2 years, I am up over 50% on capital appreciation. Now check this out. It gets even more exciting. If you go all the way back to 2011, I purchased a tranche at $63.54. I'm up 149% on that tranche. And you can see here, just simple yield on cost, not even counting reinvested dividends. Most recent tranche is basically the current yield, which is 2.7%. The tranche from just over 2 years ago is already at a 4.2%, which is fabulous. And the yield on cost for that early tranche, that original tranche, first tranche in 2011 is a 6.7%. And again, this is simple yield on cost. Does not take into account reinvested dividends. So I'm just taking the current dividend, I'm dividing by my purchase price for that tranche. And so key takeaway, this is a stock that has been a fabulous long-term performer, and who would have thought in the paper, tissue, and toilet paper type category, even in that type of category, it is possible to have huge capital appreciation as a long-term dividend investor who is not even investing for capital appreciation. It's nice, it feeds my ego, but again, the reason I invest is for the dividends. So that is my most recent stock purchase, and this month I am focused on quality. I'm focused on ride or die stocks. I'm trying to buy some of my ride or die stocks like Kimberly-Clark that I had not purchased for a while, that I had neglected, if you will. And so another one that I have been neglecting, that is my number 2 favorite dividend stock of all time, is PepsiCo. And so I am buying more PepsiCo. I'm going to share it on the screen right now. Check it out. And so with PepsiCo, it's currently trading at 137 and change. Analyst EPS estimates are 536 this year, 594 next year. Basically, the current PE is a 25, next year 23. This thing is richly valued. No doubt about it. It's overvalued. The reason I am buying it is for strategic portfolio allocation reasons. It's ride or die. I wonder if it will ever go on sale, if it will ever be a value. Maybe it will, and if it does, I'll go heavier than I am now. That being said, I just need to buy it because it's under allocated as to where I want it to be. I'll link in the description below to my complete dividend stock portfolio where you can see my current allocations and my goal allocations for each of my stocks that I own. And I just got to buy the thing. I haven't been buying it as much as I should. Thankfully, I've been reinvesting dividends. But anyways, the dividend per quarter is 1.02, and per year is 4.09. It's actually 1.0225 per quarter. And so the starting dividend yield is 3%. And so even though the stock is a bit overvalued, what compels me about Pepsi now is I can instantly get a 3% starting yield, which is fabulous in this interest rate environment. It's fabulous. And the compound annual growth rate on average of the dividend is really good. It's been a really solid 8% over the last 5 years, although with a payout ratio of 76%, I think that rate of dividend growth will slow down. I think it will slow down for Pepsi, speed up probably for Kimberly-Clark. And so with that, I just want to share really quick at the bottom of the screen a few of my purchase history with PepsiCo. And so some of my big purchases that I made, recent big purchase was from May of 2018. I also bought a big tranche of Kimberly-Clark there. I don't know what was going on in May of 18, but I must have had some extra capital to deploy. It was a big month. And so I bought some at 96, 97. And so the fact of the matter, again, just over 2 years, I'm up 41%, and my yield on cost is 4.2%. That just goes to show with value investing, if you buy and hold, there are opportunities for capital appreciation and high yield on cost. Now, keep in mind, I think at the time PepsiCo wasn't on discount, really. Kimberly was. 2018, Kimberly and Procter & Gamble were on discount. And so value investing, part of it is not just buy and hold and hey, it goes up. And certainly that's been my experience, but it's also timing it and buying when things are on sale. And to be fair, Kimberly and Pepsi, they're not really on sale now. But again, I am buying for the reasons mentioned, that I can literally set and forget, and they will do very well for me, and I can live my life. I don't have to worry about the news on a day-to-day basis because it just doesn't interest me. No disrespect, though, to those where it does. I know a lot of people like to follow just the major headlines, the politics, the political landscape, all that type of news. For me, I prefer to just go for a long distance run, or again, work at my job and build value, build real value with my hands. And so moving on, another big tranche for PepsiCo was from March of 2011. And that's where I bought at $63.78, and I'm up 115%. Yield on cost is 6.4%. And so just a fabulous, fabulous tranche there. And so that's what I'm doing right now. And so literally, this is an interesting video because I'm up late Friday night. I've already worked a hard week, get no break. I'm kind of at the point I can't do this anymore, but and I haven't been even focusing on the stocks, which is such a passion of mine. YouTube, it's kind of gone to the wayside, but don't worry, I will make it happen. And so videos might be a little less frequent, but we will get those done, and I will continue to share my thoughts, my trades on all of social media. Put in the comments below, have you ever been in this frame of mind? Have you ever gotten to that point where something has just taken a front seat in your life and some of the other things have kind of gone to the side? And I'd be curious if, as a dividend investor, share your experience in the comments below. I would love to hear about your personal experience. And so I love you all. Thank you so much. Please give the thumbs up to this video if you enjoyed it today. Before I leave, in terms of full disclosure, I am long the stocks mentioned today. I personally own Kimberly-Clark, ticker symbol KMB, PepsiCo, ticker symbol PEP, and Procter & Gamble, ticker symbol PG. Also, big shout out, I am long 3M, makers of this whiteboard, ticker MMM, and of course, I am long Apple. I am long ticker AAPL, and boy, that has been a dividend stock that has done well for those involved with the company. And so, in terms of a disclaimer today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market or anywhere else, please consult a licensed financial advisor. Literally just sharing my journey here on YouTube for fun and entertainment. In this kind of crazy stock market we're in now, it is totally possible to lose money. It is risky. I love you all. Please show your support. I will see you in the next video. Have a wonderful weekend, everyone.